In this video, we're going to be looking at a strategy that's based on niceties concept that involves previous day highs and liquidity sweep. Now, what's liquidity? Liquidity is a stagnant price level where price will reside and usually resides above old highs and below old lows. This strategy is basically important because why support and resistance that looking for a low to sell off or buy off will be looking for that high or low to be taken out, right? And expect a reversal in price. So let's look at the rules. So the very first rule is once the new week opens, you want to mark out the new week opening price. You drop down to the 1 hour or 4 hour and you mark out your most recent swing high or swing low. So in a bearish condition, you'll be marking out a most recent swing high. Now why are you marking out the most recent swing high? So once liquidity is taken out, we expect a sell, right? So liquidity is going to reside above old highs in the form of buy stops, while liquidity resides below old lows in the form of sell stops, right? Anyway, once the liquidity is taken out on the 4 hour or the 1 hour, you have to drop down to the 15 minute and you wait for a market structure shift. So let me just illustrate that. Once the market opens, you mark out the new week openings price. Once you do that, let's say the market is bearish. So higher high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Okay, so when price opens, you want this high to be taken out. So once price comes up and takes that out, right? So this is what you're marking out from here. So to the left of the opening price, you want to mark that out. And once that is taken out, you want to drop down to a 15 minute and you wait for a market structure shift and enter at any fair value gap. So on a 15 minute, this is what you're going to expect. Price to come back into the fair value gap and then you can target this previous low, right? So it's going to look something like this. And I usually like targeting 1 to 3 for TP1 and 1 to 5 for TP2, right? And actually, if you have a good bias with that, you could hold your price till a recent or a higher time frame price swing. Remember, liquidity resides at every high or low. Okay, so let's just go into the chart and let me show. Let's look at an example, right? So let me go to the weekly time frame. Okay, let me just do this. Okay, so on the weekly time frame, what I want to do is I want to just mark out and I drop to the 1 hour. This is what I have, right? So as you can see here, it is Sunday at 5 p.m. Now, if you look to the left of the chart, you're going to note price is literally bearish. So according to our rules, we mark out the most recent price high in a bearish condition right here, right? So above this, what do we have there? We have buy stops. So after taking that out, we want to drop down to a 15 minute. Okay, so on the 15-minute time frame, you can see price break structure right here. On the 15-minute time frame, you can see price breaking structure right here, and an ICT redistribution rebalance occurring right here, right? And you want to take our trade and we target 1 to 3. Now you could still put your stop loss just below the redistribution rebalance, or better still, you put it right below the swing high. That's going to be a 12 pip stop. So I usually like taking 1 to 3 for my TP1. As you can see, 1 to 3 got hit, and that's 40 pips. And I usually like taking the most recent price swing. As you can see right here, it also got hit. As you can see, guys, this strategy is very, if you just follow the rules. Okay, let me go to the week just before this. This Sunday, right? So I just draw that to, okay, right here. Okay, let's go back to the 4 hour. So can you see here? Price gets taken out right here. So I want to go down to the 15-minute, right? So we drop into the 15-minute time frame and we look for a market structure shift. And as you can notice, this price kept selling. From here, price later kept selling, as you can see. Kept selling right down throughout the whole week. But 1 to 5 is our target. Okay. So wait for a 15-minute change of structure. Once this was taken out, you can see right here a price swing. Boom. And right within here we have an OB. We have this other block, right? And just under we also have an imbalance, as you can see. So had it been you miss this one right here, this thing an imbalance that occur here, and you just come and you take 1 to 13 pip stop, and you take 1 to 3, right? 1 to 3 gets hit right here for TP1, and our TP2 is right below the swing low. Why? Because we know below the swing low there's liquidity resting there. Remember what we said liquidity is? Liquidity, it is simply a stagnant price level where price will reside, and usually below old lows and above old highs. And as you can see right here, boom, it hits TP. Now this actually just the previous weeks on EU. That's this week, the week just ended, and the week before. So had it been you're using this strategy, this is what you should have had. Now guys, it works. I've tried this strategy. It works mostly on EU and GU. I've not actually backtested on futures or indices, right? But I know it works on EU, GU, and AU as well. So if you like the video, please just kindly subscribe, and see you in the next video again. Be safe.